Good afternoon, everybody. My name is Oskar Rönnqvist. I'm an equity analyst at ABG covering the iGaming sector. With us here presenting today, we have Hessi Mokka, who not too long ago became a member of the board. So with that, I'll leave the word over to you, Hessi. Please go ahead.
Thank you, Oskar. Thank you for the quick introduction. Let's jump right into it. So we had recently our Q4 report 3 weeks ago, and I will walk you through that a little bit, and I will hopefully get some good Q&A questions from Oskar later on. So our Q4 highlights, we delivered another all-time high revenue and EBITDA. It was a very strong quarter for us. Our media division achieved a 91% year-over-year growth in first-time depositors, which is a very important KPI for the media team. Our platform and sportsbook continued delivered positively with 4 new brand launches and 6 new clients signed. And media signed our first publishing partnership agreement with News Corp with the 2 brands, The Sun and TalkSports, which I will talk about a little bit later. And the biggest announcement was that we signed the AskGamblers deal that we bought from Catena Media in 15th of December. So our numbers quickly is that we hit 26 million euros in Q4 in revenue, and our adjusted EBITDA was 10.8 million euros. And we've been growing for the last 12 quarters, all our KPIs. Our pro forma results came in at 92.5 million euros, which was in the upper range of our guidance, which was between 87 and 93. And our pro forma EBITDA come above our guidance, which it was between 30 and 35 million euros. We hit 35.5. A quick business update from the media business. We reached all-time high revenue of 17.8 million euros. And we grew 40% year over year, all organic, which we're very proud of. Our EBITDA, adjusted EBITDA, grew to 8.9 million euros, and we had an EBITDA margin of 50%. Both paid and publishing, which is 2 verticals within the media business, grow to all-time high revenues. And we had obviously a positive impact from World Cup, but due to us signing a lot of rev share contracts, which you see in the column down there, is that we get recurring revenue from these contracts, which will follow us until 2023 and onwards as well. And we have 60% of our revenues were from those rev share contracts, which is recurring. And if you look at the full year, we had 61.7 million euros in revenue and approximately 30 million euros in EBITDA. And we ended the year with a margin of 48%, which is in the range of what we always discussed before, me and Oskar as well. This is a very important KPI, which is the first-time depositors. We reached all-time high levels at 116,000 FTDs for Q4 and netted above 350,000 FTDs in 2022. And these contracts are very important for us when we have our rev share component, which these contracts will be contributing with money hopefully in the next 3 to 5 years as well. And if we look at our revenue split, is we have hybrids of 45%, which is both a CPA component, which you get one-time fee and revenue share, and 50% pure revenue share. So together we have 95% of our new contracts is some kind of a recurring revenue contract. Our US traffic grew 76% year over year, which we have taken another approach to US market. If you compare us to our competitors who have bought a lot of assets in US, we want to grow our business organically and be more of a statewide approach with our 2 big brands, or now 3 big brands with AskGamblers. LATAM is a very strong region, which we have invested heavily in since 2020, and that has given us some good numbers and return on investment. Very happy with that. And one other thing that differentiates us from everyone else is that the more mature markets, like the Nordics and Sweden and Finland and Denmark, we are able to grow in those markets still. And that's something that I think is a little bit special for us and differentiate us from our competitors as well. So the big news during the Q4 was the acquisition of AskGamblers. It's, if not the biggest or most well-known casino affiliate in the world. Our competitors, Catena, had it and wanted to make a strategic shift. And as soon as we found out that this one was within our reach, we didn't hesitate. So we think that this could be very good for our portfolio and fits our roadmap. And we see a lot of synergies between the brand and our business, where we can optimize cost and increase revenues by adding what we are good at. We completed the acquisition on the 31st of January, and we have taken over the assets since 1st of February. Now, if we move over to the business update for platform and sportsbook, which is our second division, we reached all-time high revenue for platform and sportsbook at 8.2 million euros. It was an increase of 54%, whereof 37% was organic because we bought another company last year called Sport & Co. Our adjusted EBITDA came in at 1.8 million euros, and as I said earlier, we ended the year with we ended the quarter with 6 new agreements secured in Q4, and we're building up brick by brick in this division to increase the revenue base as well. The platform for full year came in at above 28 million euros, and we have a positive EBITDA of 4.6 million euros all in all. We have in 2022 23 new agreements signed and market expansion deals, which will hopefully be a positive contribution in 2023 and 2024. The business is a little bit built up like that. When you sign a client, you onboard it, and then you start ramping it up. It tends to take between 12 to 18 months before you see the real revenues coming in the platform business. As we said, as I said earlier, we bought Sport & Co., a sportsbook company with an own platform in April 2022, which we're now integrating and seeing a lot of cost synergies between the two companies. We have today 62 brands, 41 clients, and 37% of our clients have our own sportsbook. And it's very important to know that when we sign a client, we don't get the fully potential of the value of the client from day one. So it takes a bit time to ramp the contracts up. And since 2020 and 2021, since we became a full-fledged B2B player, we've signed more and more clients, and we're seeing the revenues coming in 2022 and moving into 2023 and onwards. So approximately 30% of our contracts is premature and very low value as of today. Underlying SaaS and related revenues are growing steadily. It's a little bit hard to explain this, but we had multiple legs before our current CEO, Richard Brown, started to sell. We sold our B2C division in 2020 to Betsson, and we had some component where we had a premium fee, and we had another structure with white labels. So extracting all of this, this is what we get when we see the pure SaaS revenue. So we're doing pretty good, so to say, but it's very hard to explain it sometimes for the investors and the market, because before we had a white label solution, which was we took all the risk, and with the new regulation and new markets coming up, it's very hard for us to do that. So Richard and the team decided to cut the white label business and just focus on the pure SaaS, where we have our own license and the clients have their own license and they can operate on their own license. It doesn't have anything to do with us. So it's since the shift of focus, we've been seeing this transformation, which I'm very happy with. And if you look at the start of this year, we're already signed 3 new platform agreements, including a very interesting one going into the highly regulated and highly profitable Swiss market, which is one of our milestones. We'll go live with that client in early 2024. We also completed AskGamblers acquisition, took over the assets, as I said, the 1st of February. Media trend is strong. Our FTD grow by almost 40%, and January developed very positively with 29% year-over-year growth. And that should be said that this year, if you compare it to last year and the comps we had, is that we had COVID relief this year, and last year it was still a lockdown where the activity was very high, and we're coming from a period with World Cup, which a lot of operators put mostly of their investments into the Q4 and the World Cup, and draw down their investments in early 2023. Despite that, we had a growth of 29% compared to last year. So our long-term financial targets is to grow in the region of 20% organically year-over-year. Profitability is to hit EBITDA target of 50% during 2024, and use that cash leverage to either pay down debt, we have a bond we have to pay down, or look for other opportunities there is like AskGamblers or whatever might be available for us out. And a quick summary. All-time high revenues and EBITDA. 2022 was an exceptional year across both units, I would say. We have a very large geographical footprint and our addressable market with our acquisition of Sport & Co. has grown to double size. We are improving operations. We are improving cost efficiency. We said in the last quarter, in Q3, that we have found approximately 8 million euros in cost synergies, which will come to fruition during 2023 compared to 2022. And we also initiated a strategic move to split those two companies, the media business and the platform and sportsbook business, two entities. And that's just to create this razor-sharp focus, capital allocation, and make it easier for investors to understand what we do. And sometimes now it's the equity story isn't there. We get the valuation of media business or the platform business is much higher than the media business. So we're trying to keep those two separated and create two companies out of it. And this work has started already, and we will continue to do that throughout 2023 to find the best solution to create as much shareholder value as possible. Yeah, that was all for me.
Right, thank you for that presentation. I'll continue with some questions. So just the first, the one that you actually ended the presentation about, but just if you could expand on the strategic review, potentially splitting up the two divisions into separate listed companies. So if you could just elaborate on the main benefits in your view to have them as separate listed ones.
So basically today we have two separated companies with a mid-management, and we're seeing that the focus isn't there. Sometimes you're over-expanding your... the investments that we're making is now from a group level, and not because the media business have shorter horizon when it comes to return on investments. Like we buy AskGamblers, we get cash from day one. We buy Sport & Co. It takes 6 months before the clients ramp up. So therefore, for us, it's better to create two entities where we have two leading teams creating their focus for each leg. They have their own P&L, they have their own investor relation, they have their own journey they can move forward to. So, and our B2B business with the platform and sportsbook division has been a little bit immature from this transformation that we made. But now we've come to a position where we're seeing actually the platform division starting to grow, starting to come to its own, like, what is it, closet or whatever. So it seems we're very confident that the platform division will become more efficient, more synergies, no more extra adding costs from the central layer. It will be razor-sharp focus, and they can create their own division and create more shareholder value for our shareholders. The B2B valuation is often a little bit higher than the media valuation. So if they want to add something or use the capital allocation for adding a payment solution or a game studio or whatever it is, it's going to be easier for them to have that trip. Instead, now we have to dilute both companies if you want to buy AskGamblers or if you want to buy Sport & Co. So, and it's also two different type of people working in the company as well. The media business is very fast-driven, very cash-hungry, and a lot of deals made every day, where the platform business is a little bit more slower business, and we have to build, and like it's two different businesses, and we don't see the synergies coming from those two companies, unfortunately. So it makes more sense to create two divisions and unlock the potential value from both companies.
Right. And just you touched upon the Sport & Co acquisition synergies. So you said that there were a lot of cost synergies, but don't you have any revenue synergies as well? Just looking at the market expansion that you can be able to.
So basically, since we bought them 1st of April, and our first contract was Angola. We signed an Angola contract with them, where they take our platform and their sportsbook. And now we're going into US, in Maryland, I think in next month, with a brand called Crab Sports, where we go with our platform and we take their sportsbook. So there is a lot of synergies moving forward as well. Just that we cut our own sportsbook, which cost us 1.8 million euros in 2022, which was announced as a non-discontinued operations, but it's still cash we're saving. Yeah, a lot. And then they had also a lot of licenses, which is key when you move into the regulated market. So our addressable market with us buying Sport & Co took us from 14 jurisdictions to 25, and now we have approximately 35 and moving up to 40 jurisdictions before this year ends. So our addressable market is growing for every quarter that goes by, and we don't need to do Portugal, Spain, Greece, or whatever it is. So we also bought us a lot of time and money for not moving into those markets. So yeah, 1st of April is our first year with them together. It's been very successful, very strong team. Their management team has been amazing. So only high praise for them. So very happy with that acquisition.
And then also in connection with the Sport & Co acquisition, I think that you mentioned savings of, was it 8 million? And then when you acquired AskGamblers, you told the market that you were supposed to run it with quite high margins, 60 to 70%.
Yeah.
I remember. So are the synergies or sort of the cost savings, are they going as according to plan, or?
On the AskGamblers acquisition?
And the Sport & Co.
Yeah, Sport & Co is going according to plan. That one we started already like 9 months ago. So that one's already in motion, and that you'll see happen every quarter moving forward. AskGamblers, we have already identified a lot of synergies where they are strong, which is the brand, and it's not Google dependent as well. So it's a very good complement to our portfolio, which means that we can now use what we are strong at, which is business intelligence. We have one of the best in business intelligence teams and tools, which we have developed the last 5 years in the media team. So we can see exactly which market, what kind of players, what kind of value is this search word valued at, and those things we're already applying to AskGamblers team, and we're seeing already some good numbers and good traffic coming in from AskGamblers. So very excited. But as I said before, the media side is in a much higher pace. So you will see the differences with AskGamblers. If you compare it to Sport & Co, the cost cutting will come quicker, the revenue increase will come faster due to it's being a high-paced industry. So yeah, we have our fixed fees model, which some are calling it the recurring revenues. We're able to bolt that on top of AskGamblers' big brand, which will hopefully bring some more revenue coming into us as well. So yeah, a lot of moving parts, a lot of fun, a lot of hard work, but it's yeah, you can see the different paces moving forward in H2 2023.
All right, and just staying on the AskGamblers acquisition, so just apart from the multiple that you bought it on and also the payment structure, just focusing on the operational performance itself in your group. So what can you bring to the table? You talked about business intelligence, but what other things can you, provide, turning the revenue decline that they had in the hands of Catena Media?
Yeah. So I don't want to talk about what they did, but what we're going to do is that we're going to open up more markets. We're going to identify where the revenue is coming from, what kind of players, what kind of search words. We identified a search word in UK, which is very high search word and very profitable search word. And when we come to the offerings, we have probably the worst offerings of all the brands. So we're switching up all the offerings. We're switching up how we're building up the front end, the tech. We're moving it to our own in-house platform where we can deploy more languages, more markets. We're going to revive the Ask Gamblers coin. We're going to, we have a checklist of thousands of stuff to do. So we're just taking 10 every day to keep increasing revenues, keep increasing the traffic. And yeah, there is the checklist. We can talk about it for hours, so not more. So we have a lot of work to do. But if you compare it to our biggest site, which is Casino Tops Online, and compare FTD per value that we get, our Casino Tops Online, our big brand, which is the competitor to Ask Gamblers, we have approximately 3.5 more times the earnings per FTD. So we're doing something right as of today. So those are the tools we're going to give to the Ask Gamblers team. And we also have the cost synergies. There were 93 people in that brand. We're 180 for a whole media team as of today. So a lot of the workforce is duplicated. And when we can take the tech from Ask to us in-house, then it's going to be another synergies as well. So yeah, looking forward to presenting those numbers in Q1.
And speaking of earnings per FTD, so just looking at your media division, the FTD growth has picked up substantially since 2021, in particular driven by paid media.
Yeah.
And still you have delivered quite solid EBITDA margins around 50%. So just, I mean, looking at paid media, usually is a bit lower margin than the publishing business, dragging down the total group, but it didn't really seem to be the case for you. So what's the secret sauce?
So the secret sauce, I can try to boil it down. We bought a company called Rebel Penguin, where Jonas Varre is now the CEO, 2017. And that was a paid media division, purely, strictly paid media. So they have a team of a lot of people who's been working with this industry in 20 years. And then we also go back to the business intelligence tool where we can look at a market like Sweden or Belgium, for example. What kind of search words is worth X? How much do we have to bid for that search word to get this valuation? If you're a media company with 5 employees and have a budget of 500,000 euros, you won't be able to outbid us because we know that this search word in this particular market is worth 1,300 euros in 3 years. So we will outbid you for that search word. We have that data. That's one part of the reasons, and the other reason is that we do everything on rev share because we can identify when we send a client from this search word to this brand, we know that the value of that contract between between us and the operator is much higher than a fixed CPA, which is where all our competitors now moving into CPA structures more or less. So we're seeing the long run instead of the short income period. Therefore, you see us having higher margins because those clients we acquired in 2021 and 2022 are paying off now with the rev share component, which is almost 100% margin. So there is a blend, but we use everything we do is data driven. So we won't go and invest in Africa if we don't know that we'll get the return on investment. And with paid division that you talked about, it takes us away from the risk, from just the Google risk that everybody says everything with affiliation as with Google. Now we're very big in social media. We're Facebook partners. We have TikTok license. We also have the partnership with News Corp, which is our first, who is owned by Rupert Murdoch. So we're differentiating our risk and getting more and more legs and revenue streams, which has been a very key focus for us in 2022. So we're not dependent on paid or publishing, or we're dependent on everything together.
So just a final question then. How excited are you about the News Corp signing, the media partnership that you recently announced?
I think it's run a little bit under the radar. For me, it's been, we're seeing incredible stuff happening with News Corp. We also went out with a press release, I think it was last week, where we're moving into more English-speaking markets, which is Ireland and the US before this month ends. So obviously we're doing something right, and they want to invest in those markets together with us, which is very good news. It also takes, we get a new leg to stand on. Yeah, very, very excited. Very good news for us. And hopefully we can continue that partnership with them for as long as possible. So we're very happy with that one.
All right. I think we are running out of time, but thank you very much for the presentation and thank you for listening.
Thank you, Oscar. Thank you.